Spring is in the air, the economy is reopening. Everybody can kind of feel this excitement as we get back to normal. Now, for investors, this can be a especially dangerous time for you because the excitement that we're all feeling, and I know personally I'm excited about the things we're going to get to start doing here in the spring and summer, that can filter into our expectations for our investments, and that can lead to disappointment because what people don't understand is all of this return to normal has already been priced into both the stock and the bond market. We've seen some spectacular returns over the last year. I'm looking at some of these statements, whether they're SEM accounts or 401k accounts that we're helping people with, and it's amazing to see those numbers. They're up 3 to 7 times the long-term average over the past 12 months. And that's not normal. We now we're looking at 2021 returns, and if you're in a balanced account, whether it's with SEM or in your 401k, you should expect around 5% returns per year over the long term. So that means if you're up 1.6% so far for the year, you're on pace for an average year. That's really good. If you're up 2.9%, you're actually on pace to get the average long-term return for stocks. So as we look at this now, with all of this priced in, things have to be even better than people expected. And I have a hard time believing that. The market moves in cycles. And if you look at the cycle we've seen in the market going back to the 1990s, we had during the 90s a 15% compounded annual return. Now, we obviously, with hindsight, we know there were some great innovations happening there, but those innovations were not enough to justify the big run up in stocks. We saw a huge correction. We saw the same thing with the housing market as that was exploding. The growth that we saw and the improvements we saw in the economy were not enough to justify those stock prices. You look at what's driven stock prices over the last year, or even really the last 12 years, it's been debt. Debt is simply future spending pulled forward into the present. That debt has to be paid back. And if you look at what's happened over the last 12 months, we can't expect to keep getting stimulus checks every 3 months to help boost the economy. When things go back to normal, there is zero chance that the expectations of growth that we've seen in the stock market are going to be fulfilled by the economic output. It's just not mathematically possible, which means we're probably due for a correction at some point over the next year, 2, 3 years. That's just how markets work. No matter what happens, we're going to see these cycles. This is especially dangerous if you're retired or retiring in the next 10 years, because now you're shifting and you can't afford time-wise to go through a 40, 50% plus drop in your portfolio. So this is where SEM can really help. And what we do is we're fully invested right now. We're participating, trying to squeeze out everything we can out of this market. But just like we did in February and March of 2020, we stand ready to take money off the table. We don't know when it's going to happen. We don't know how bad it's going to get when we do start to get those sell signals. But we do know there will be a better time to get into the market. And that's what we're going to be waiting for. And so wherever you're at in your situation, there's a lot of resources on our website, semwealth.com. First one is our risk questionnaire. I'd encourage anybody to take that. It gives us a chance to take a second look and give you a quick snapshot of where you're at and maybe where you should be at, some adjustments you might make to your portfolio. The second one is the blog. The blog is a place where once a week we're going to be posting our outlook, what we're seeing in the economy, what we're seeing in the market, any changes we're making to our own investment portfolios. That's going to be your first place to do that. So, message for today, lower your expectations. As everything returns to normal, so will your stock performance. Don't fall for the mania that we're seeing out there. It's been a great 12 months for investments. Don't expect that to continue. And most of all, be ready and to participate in the next upcycle, because markets will move up and down. The key is to buy low, sell high, and hopefully with SEM we can help you achieve that. So make sure you subscribe to get the latest updates. We'll talk to you soon.